Hello everybody and welcome to today's webinar focusing on the future of customer engagement. My name is Yvonne Byrne and I'm a partner here in Deloitte Digital in Dublin, and I'm your host for this morning's event. We are delighted to partner with Salesforce for today's discussion, and given the current climate, we recognise as business leaders you are dealing with very complex and rapidly evolving challenges, whilst also trying to predict what the future might hold. Central to this is whether you are equipped to meet changing demands of your customers. We all know behaviours are changing at an incredible pace, and your customers and staff are being forced to interact in very new and very unfamiliar ways. So today we thought it would be useful to focus on how we see customer engagement evolving moving forward, and provide you with some of the perspectives on some of the capabilities that we believe will be increasingly important for your business moving forward, and how you can set yourselves up for success. We have some fantastic speakers today who will be sharing their point of view on the future of customer engagement and how the broader financial services sector is responding in this current environment. First off, we're going to have Simon Judd. Simon is one of our Deloitte Digital banking leaders based out of the UK, and is a leading SME in customer experience strategies. Simon will be speaking to us about how organisations are reimagining their journeys, and that building the perfect customer journey is a myth. It actually all comes down to arming ourselves with next level customer insights. Next, we're going to have Joaquin de Venezuela. He's the head of FS EMEA and LATAM for Salesforce. Joaquin will be speaking to us about how organisations are maximising opportunities to enable growth while mitigating risk. And finally, we are really lucky to be joined by one of our joint customers, Gadea de la Viuda, who is the founding partner from Abante Asesores. Gadea will be telling us about the recent transformation her asset management firm has undertaken, leveraging Salesforce to disrupt their advisory model. So before we start, there's a couple of points I think I just want to call out. First of all, you're going to have the opportunity to submit your questions, any questions you want, to presenters by typing your questions into the questions pane on your control panel. You can send your questions anytime during the presentation. We'll collect them and address them at the Q&A section at the end of the presentations. Any questions that we don't have time to answer, we will collate these and we'll actually come back to you post the webinar, so don't worry about that. And just for your information, we want to get you guys involved as well. We're interested in getting your opinion, so we're going to issue a couple of live polls throughout the session. Please note these are completely anonymous, and the results will only be shared in percentage terms. Okay, so without further delay, it's now my pleasure to introduce you to our first speaker, and I just want to welcome Simon Judd. Simon, over to you.
Thank you, Yvonne, and good morning, everyone. Welcome. I hope you find the topics of discussion that we have for you this morning both interesting and relevant, and I look forward to answering any questions that you may have at the end. The focus for my discussion this morning centres around customer journeys and our perceived understanding of the customers, and how we build that understanding into designing the journeys, both digital and human assisted, that we develop for our customers. Can we move on to the next slide, please? I think it's easy to acknowledge that over the last 5, 6, 7 years, financial services organisations have become very adept at applying design thinking to develop journeys based on, or with a focus on the customer and employee, developing personas that tend to drive out our understanding of customers. Experience mapping, service design, journey design and service blueprints have become commonplace within organisations and are now a fundamental part of digital and operational process design. The objective of doing that is simple, both to better serve customers and to better enable employees to serve those customers. But the real benefit is obviously to maximise efficiency, to streamline and optimise operations, and to maximise opportunity conversion with our customers. And the result of that has been considerable investment in digital journeys, in seamless self-serve digital journeys, focusing both from simple transactional activities through to complex product acquisitions. Could we move on to the next slide, please? But why don't customers rush into those digital self-serve journeys all the time? It's largely because we still have some way to go in fully understanding our customers, understanding their needs, and being able to be more proactive and value add in their lives. Only a proportion of customers are financially and digitally confident enough to fully adopt digital-only self-serve journeys. The majority of customers expect organizations to help and guide them and value a relationship with their financial service provider to help them decide what's right for them, to help them with their financial well-being. This has and will continue to be exacerbated by COVID. The need for continued human guidance and interaction within those digital channels is now more important than ever. So how do you become that trusted advisor to your customers? How do you build that engagement that results in greater opportunity conversion and increased adoption of digital channels? It starts with understanding and capturing the right information about your customers. We tend to, when we look at the information we need to capture or getting a good understanding of our customers, from a financial services perspective, where we start to develop propensity models which look at 4 particular areas: resilience, recognition, receptivity, and readiness. Resilience is very much around how well placed a customer is with regards to their financial well-being, their assets, their products they hold, their demographic profile, where they are in life, their life events. Recognition is very much about acknowledging the need for financial products at particular points in their life or because of particular circumstances, and again exacerbated by COVID at this moment in time. Receptivity is about people's view of financial organizations. Do they trust them to be the trusted partner and to advise them on their financial well-being? How risk averse are they with regards to financial products and acquiring financial products? And finally, readiness is very much around the digital confidence and financial literacy of an individual and how easily or how confident they are in adopting digital routes for product acquisitions in the financial services space. Banks tend to hold partial information around resilience and readiness. They know the demographic profile, they know what products people hold, they know how digitally confident they are by their use of mobile platforms, internet banking, etc. But only partially. There are areas of resilience that banks tend to not spend enough time finding out about. People's life events, upcoming life events, where they are, what they're planning on doing. And recognition and receptivity tends to be minimal in terms of our understanding of customers, mainly because the information associated with that is not captured at the right time. To capture this information, we will be able to understand our customers much better. And often this information is captured as a result of human conversations in virtual branches, in service centres, through product conversations. And the need to harvest that information, gather and glean the insight from that information is absolutely vital. Can we move on to the next slide, please? There's an added complication with our desire to get this single view of customer, to get this detailed understanding of customer so we can provide them with that personalised approach in our digital journeys and in our engagement. And it's usually because customers and their financial needs and goals sometimes don't exist in isolation. This is Sarah and Adam. They're a couple. They're renting at the moment and they're wanting to buy a home. Now, they have the same combined financial goal and the same desired outcomes from those financial goals, but individually they're very different. If we refer back to our propensity model, actually the propensity behaviours and characteristics of Sarah and Adam could be very different. Sarah could be far more digitally and financially confident. Adam may want to seek more human assistance and more reassurance. He may want to have face-to-face conversations rather than adopt digital channels. But we tend to build the same journey for the two of them because it's a couple buying a single product. But those journeys are inflexible, and Sarah and Adam will operate very differently in terms of their approaches of completing an end-to-end task such as acquiring a mortgage product with a bank. So we need to both understand Sarah and Adam individually, but also as a couple, as a household, and being able to have that information, access that information, store it, and surface that information to call centres, to branch staff at the right time is absolutely vital in building and developing the right engagement approach with customers. So how do we do this? Can we move on to the next slide, please? It starts with looking and investing further in customer engagement platforms, building a platform that brings marketing, sales, and service together and enables the design and orchestration of better, more flexible, more productive journeys. A platform that captures, stores, and surfaces all of the insights and intelligence we have about our customers, and therefore enabling us to have more informed and meaningful conversations with our customers, to be more proactive with regards to their financial well-being and to support them with better advice, and essentially to design and orchestrate more flexible, more responsive journeys that blend the digital and the human-assisted channels. And the flexibility is key, because journeys aren't as simple as clear, happy paths. We start here, we predict that the customer will follow this path and finish with the acquisition of the product at the end. They break up, they move between channels, and as we've seen with Sarah and Adam, there are two different people having two different journeys for the same objective. So we've got to build these flexible journeys in a better way. Now, this platform is essential. It captures all of the interaction activity, it leverages the resulting insight to drive next best action, and surfaces the right information at the right time to marketing, sales, and service colleagues across the organisation. And this is becoming increasingly key. COVID is driving new demands from a distribution perspective. Employees in frontline engagement channels such as call centres and virtual branches will be expected to undertake a much broader set of tasks, combining sales and service, and increasingly being more responsible for the financial well-being of their customers. The key to achieving this is to ensure that every one of those customer-facing employees has access to the same single view of that employee and all the insight that's been generated from every interaction with them over time. Only by doing this, and only by surfacing that information at the right time, in the right place, at the right moment with the customer in their channel of choice, can we really expect financial services or organisations to say they're really placing customers at the heart of everything they do, at the heart of their digital journeys, and only then will be able to build better digital journeys. Thank you for listening. I hope what I had to say was interesting and relevant, and I'm more than happy to take answers to questions at the end of the session. Thank you. Back to Yvonne.
Simon, thanks a lot for that. I might keep you on for 1 second. Interested to get your view. Really interesting presentation. I guess in the new world of COVID, things are happening really, really quickly. Behaviours are changing. It's getting really, really complicated. It's almost hard to figure out where to focus and where to prioritise. What advice can you give to our listener in terms of the critical business capabilities that you think, you know, institutions need to prioritise now to ensure they are evolving at pace? Like, where would they start in terms of the key capabilities right now?
I really do think it's with the call centres at the moment. So as we look at the move to virtual branches, the increasing impact on call centres and demand on call centres, it's making sure they have the right and relevant information at the right time to have conversations with customers, and being able to be responsive and be responsible. So not only being able to achieve the things that customers want quickly and solve problems, carry out activities, transactions on their behalf, but also to be their financial wellbeing partner. The advice they give is now more important than ever. And the only way you're going to do that is to ensure that everybody in that frontline facing role has access to the right information about the customer, and has the ability to make the right decisions. So the capability is just, how do you get that information to those people at the right time, and have that building all of the time? How do you develop, how is the insight about the customer continual? So every conversation, every interaction develops new insight with that customer, so you can better serve them moving forward. But it very much is around that capability of that dashboard to enable the interaction with the customer to take place.
Very good. Okay, thank you. Yeah, great answer. Simon, thanks a lot. I'm going to speak to you again at the end of the session. And again, everyone, if you have questions for Simon that we want to pose to him in our Q&A section at the end of the presentation, please pop them through now. Okay, so let's move on. So it's my pleasure to introduce our second speaker. Welcome to Joaquin de Venezuela. Over to you, Joaquin.
Thank you very much for attending to this webinar. We are going to speak about how are the organizations maximizing the opportunities to enable growth and mitigate risk. I would like to start this conversation speaking about the success in financial services that is due to the success of our customers and the value that they are extracting from the 360 customer platform. We see organizations across all different subverticals, from asset management to retail banking or to P&C in the insurance sector, that are somehow trying to achieve that idea of customer centricity, putting the customers at the center of everything that they do, trying to achieve and to meet their customer expectations, and reimagining the way how they engage with their customers. From the time where they identify a prospect, a potential customer, to the time where they start transacting and servicing that customer. And for that, they use the capabilities that we have across all different products that we have in the platform: sales, servicing, marketing, of course, artificial intelligence, collaboration, e-commerce, analytics. So we have seen thousands of financial institutions who are moving forward, trying to achieve that customer centricity. And it's very interesting because if you compare to asset managers or to wealth management firms or to life insurance companies, you will notice that they visualize in a different way the customer journey, and they for sure visualize in a different way the path that they need to implement, the transformational roadmap that they need to implement to achieve that customer centricity. So this is quite unique, I would say. These journeys, these paths are quite unique for each of those banks and insurers and fintechs and insurtechs, because it depends on the strategic goals that these companies have. It also depends on the history, the culture, the systems that they have in place. And well, it's a roadmap, it's a transformational journey that is just for each of them. So obviously we have been working with many of these banks all around the globe in the last 2 decades. And what we will all agree is that the COVID has changed the priorities that all the financial institutions had. This is a crisis that is very different compared with any other we have seen in the past, because of the consumer and the retail customers' habits. I would say that they are fundamentally different. So we truly believe that financial services will never be the same again, and that because of those changes in the consumers and the customers' behaviors, we will see how the financial institutions reimagine the distribution models, reimagine the way how they operate, how they engage with their customers, and these priorities also will change in terms of providing support to the communities, to the employees, and to the banks and to the bank's customers and the policyholders in the very short term. This is also a fundamental difference compared with what we have seen in the past. We see that the financial institutions are truly committed to help their customers, and that they also need to respond to the crisis from an infrastructure continuity point of view, but also from a business continuity point of view. We see a lot of activity, a lot of areas where we are helping financial institutions. One of them is what we call Go Digital. We see banks and insurers activating new channels like WhatsApp, implementing deflection strategies using bots. We see also a huge appetite to mobilize contact centers and to implement new digital advisor roles. We will speak about that during the presentation. And finally, we see that some business processes that were business as usual, I would say, like lending or collections, are now top in the mind of the executives because of the relevance that they have in a context where the banks are working as a distribution channel for the government-backed loans, and where collections are absolutely critical to protect the balance and the P&L of the financial institution. So let me focus on this last business process that is critical, and is also a must when thinking in keeping the balance between reducing the credit losses and supporting customers in times of need. And what we are doing from a Salesforce perspective is to help the lenders to move from system of records to system of intelligence, really leveraging every piece of data that is available and making all the information available to the different stakeholders. Speaking about collectors, of course, but also thinking in the CFO and the different management levels. What we do is to help the financial institutions and the lenders to reimagine the collections process. So giving this process, I could say, a human flavor, because what we want is to implement that idea of financial well-being. And we make that end-to-end, thinking in a first phase where we identify the potential payments that will be overdue in a pre-collection phase. We design a contact strategy for that particular individual or company, and we try to agree a repayment plan depending on the capacity that this company or person has to pay the mortgage, to pay the consumer loan. And finally, we close the case or we move that bad debt to the agencies, and we of course monitor the performance of those agencies. At the end, what we are doing is to, as part of this initiative, is to set up the stage for a bigger transformational initiative that can be implemented after the COVID crisis. But here, what we are defining is a first 360 customer view, where we surface all the interactions with this particular customer. We have access to all the invoices, the contracts, the orders, the opportunities. We manage the disputes, and we, of course, track the performance of each of the collectors. The tasks performed, the payments that have been processed, the invoices, etc., etc. So in this context of financial crisis, it's also important to automatize tasks that have been traditionally implemented manually. So this is an example taken from Salesforce. Of course, we make all the collections processes also on our platform. We are a big company, so 17 billion in revenue, and we have a team of 200 collectors that makes an extensive use of Marketing Cloud to automatize many of these collections processes, implementing, of course, different strategies. This is a real example where you see a 7 steps collections process, and 6 of these 7 steps have been automatized using Marketing Cloud. At the end, the approach that we take maximize the number of invoices that are processed. We have multiplied by 3 that number since the company implemented Salesforce on Salesforce, and we have also been able to reduce by 50% the invoice aging. This is super significant, especially when thinking in this crisis and a situation that we will see in terms of incremental potential defaults. So, but this is a new area where we will need to mitigate risk, but we will also have tremendous opportunities for growth. So, and one of the things that we see more and more in the financial institutions is that they are starting visualizing which is the next new normal. So how they are going to redefine their distribution networks, probably closing more and more branches, and how they will be focusing on the new digital advisory roles that are basically focused on building lasting relationships and implementing this idea of advisory processes. To be honest, this digital advisor role is not new to many financial institutions. We have been helping banks to implement this model since 3 years ago. This is an example of one of those banks, a Spanish financial institution that has 600 remote advisors. So basically, they cover 10% of all the retail customers. We are speaking about 750,000 customers, And it's quite interesting because this the role of these advisors is mostly proactive, outbound. They have double booking with the branch, and this is also very important to implement a smooth transition from physical branches to virtual branches. And the outcome and the performance that they have achieved is super interesting because with this reduced number of advisors, they are managing up to 30% of the lending business, 10% of the investment business, and they have achieved 60 in terms of NPS, so double the number that they see in a quite extensive branch network that has more than 1,000 agencies. So a model that has been tested in a few financial institutions around the Europe, and that we see is going to be the new norm in a situation where we see that many of the new digital customers who used to be visiting the branches at least once a month are now using digital channels and will remain as digital customers once the COVID crisis is over. So in summary, we see that, the customers will continue to be very focused on putting the customers at the center of everything that they do, that they will want to accelerate their digital transformation programs because it's a must in a world that is mostly digital. That's pretty obvious to us, but that in the short term and mid-term, until the crisis is over, we'll try to reimagine some critical processes like collections, and we'll also try to start implementing new digital advisory roles. And Salesforce and Deloitte have the experience to help you in these areas, and also to implement these kind of initiatives as a first step to design and to implement more ambitious transformational initiatives. And that's all. I think that is the best time ever to change customer journeys. And thank you very much.
Thanks, Joaquin. Appreciate that. Joaquin, before I come to you, I think it's a good point actually to get some feedback from the listeners. So I'm going to ask you to do a little bit of work. We're going to launch a very simple poll, if we can get that up. 2 questions. The first, if we can get that live. Yeah. So what we're interested to hear from your perspective, I guess, is do you believe the level of digital adoption we witnessed through COVID-19 will continue to sustain when things return to normal? Yes or no? So do you think things will keep going, or do you think digital adoption will revert back to some degree to what it was? Okay, so give you a couple of seconds to just give your immediate reaction to that. Great, and Sinead, you might move on to the next one. Lovely. And as a result of that, I guess, do you believe your business is making the necessary investment to transform how you engage with your customers in the new norm? So are you setting yourself up for success? Are you putting the right capabilities and investments in place to do that? Yes or no? Okay, so while our attendees are considering their answers there, I'm just going to double check. Joaquin, can you hear me? I know you've had a couple of listeners. Ah, fantastic. There you are. That's good. So, Joaquin, thank you so much for that presentation. I think it'd be good just to get your, this was your view on a couple of things. So you talked a lot about kind of shorter term, more kind of practical initiatives that you see clients are focusing on right now as a result of COVID-19. I guess looking forward, digital is going to become table stakes. So where do you think FS institutions need to focus on to regain a platform of differentiation? Like, what do you think their emerging trends are, and where do you think they're really going to deliver innovation and differentiation when everyone is now doing digital?
Yeah, so I think that COVID has exacerbated some existing trends. So I think that all the financial institutions were thinking in in a transition from physical to digital channels, in maximizing digital sales. That was something that was part of the plans that they had built, and that they were going to complete in 3 years, 5 years. But now with COVID, what we have seen is that this movement has happened in a very short period, so in only a few months, and that in somehow the financial institutions need, in one hand, to, how would I say, review the business models that they have, revisit also the way how they are distributing their products and services, and the product mix. So for me, the world after COVID will be very different, will be mostly digital, and the banks and the financial institutions in general will need to make deep changes in the way how they have made business, or they make business, and also in the way how they interact with their customers and implement their distribution models. I think that this also has big implications in terms of cost. So there are going to be massive pressures on cost, and there is going to be a massive need to optimize the cost-to-income ratio. And the good news is that this acceleration of digital and will enable or will allow the financial institutions to reduce cost, distribution cost, and cost of selling. And this is very good news in the current economic context.
Okay, great. Thank you, Joaquin. Appreciate that. We'll talk to you at the end if we have time. I want to move on. I'm just conscious of everyone's time. What we'll do is the poll results. Thank you for participating in that. We'll look at those after our next speaker. So I am delighted to introduce our final speaker and introduce you to Gadea de la Viuda, who is from Abante Asesores. So over to you, Gadea.
Good morning to everyone, and thank you to Deloitte and Salesforce for inviting me today. Thank you very much to all of you that are attending to this webinar this morning and sharing some time with me. My name is Gadea de la Viuda. I am one of the founders of Abante Asesores, and I have been working in the asset management and wealth advisory industry in Spain for the last 25 years. In these 10 minutes, I will try to give you like a small flavor of what is Abante, and why we decided to move to Financial Services Cloud and how we did it. I called my presentation 75 because 75 are the real improvements that we have had with Salesforce at this time. Only I just wanted to say that we are quite a small company in a quite a small market, that is the Spanish fund market. Telling you a little bit about Abante, we are an independent asset management advisory firm. Our aim is to help persons to relate with its money and take good decisions in life. We founded the company in 2001, and we previously worked for Morgan Stanley in Spain. Now we are 18 partners, 200 employees, and Mafre, the Spanish insurance company, owns 10% of our equity. We have 4,000 million euros of assets under management, 7,000 clients, and 6 branches in Spain. Our strategy is basically focused on financial life planning and wealth advisory. And our asset management company manages basically funds of funds, pension plans, SICAVs for private clients, and both in traditional and alternative investments. Our company, as we started from scratch 20 years ago, is a customer-centric company, and we offer a unique value proposition that is contributed by all the teams of the company. In Abante, we have an account manager that is the one that is in charge of profiling the clients, and our clients might be individuals, family offices, family business, companies, or institutions. And the services that we deliver to those clients are financial life planning, strategic family planning, wealth advisory, corporate and real estate advisory, asset allocation, global aggregation, and portfolio advisory. For us, Financial Services Cloud has to be the mirror of the relationship that we have with each of our clients, one by one. Our history with Salesforce is an old history. We set up Sales Cloud in 2009, and in 2015 we set up Pardot. because we wanted to integrate our sales efforts with our marketing efforts in the same CRM. And in 2018, as a company, we had a strategic thinking, and we decided we have to improve our technology and also to improve Salesforce as our sales and marketing tool. We decided with Salesforce to move on Salesforce Financial Services Cloud, and also we chose Deloitte as our partner. We are very close to one of the partners of Deloitte here in Madrid that is in charge of Salesforce, that is Francisco Armesto. We were very confident on him, and Salesforce was confident on Deloitte, so we had the perfect match for the project. And now we are working also in Einstein Analytics in this year. Here you have the timeline. Basically, it took us like 9 months to have the first deployment of Financial Services Cloud, and now we are working in new functionalities of the tool. Our challenge, our aim to move to Financial Services Cloud was, and is today, of course, to sell more and serve better to our current clients and future clients. And for that, we knew we had 3 main goals. The first one was to redesign Salesforce to the evolution of our business model and our client relationship. We have defined a new client cycle with different stages, rules, and alerts for each one. We go from prospects to potentials to pre-client, clients, and growth. Also, we have new criteria for segmentation clients that is basically based on service standards. And we cluster the clients in 3 types: high-value clients, traditional clients that are basically financial planning clients, and systematic clients that are smaller clients that we basically give to them advisory, portfolio advisory. Really, we don't have a customer journey for each of these clients. What we have in a yearly basis is like a personal roadmap that is set up by the account manager of the client and is part of the account manager dashboard and part of our client file. But we don't have still defined any customer journey, but I think we will do something of this next year, especially for systematic clients. The second goal was to digitalize and connect some back office and middle office processes. And in this sense, Financial Services Cloud helped us to link advisory tools with digital signing, with compliance, and with document filing. And all of this has been very useful for the back office and for the sales people. And the last one was to clean our database and have a better data model in order to have new dashboards for sales people, for management, and also new alerts and KPIs. And this is basically where our goals. The stones that we found in the way, well, the first one, that there were very few experience on setting up a Financial Services Cloud in the asset management and wealth advisory industry. I think we were the second company or the third company. And the second one, that is that the project was proposed as a migration from Sales Cloud to Financial Services Cloud, and at the end, it was more like a new setup. So we had some problems and difficulties with the migration of the data to the new data model, with the integration of our back office and with the integration of Pardot. But by the time everything is solved and is working really well. Our main benefits that we are enjoying today is that we are ready to scale the company. The Spanish market is going through a consolidation, and we want to be an actor on that. And well, I have a very close example, because 2 months ago, we bought a small advisory firm in the north of Spain, and it has been really, really easy for us to integrate all his data and all his client information. And already these people is using also Salesforce Financial Cloud in a record time. Also, it has been very important for us that we are getting a better use of the sales team time, so they can spend more time, serving clients and looking for prospects, and that's very important for us. The third one is that we really know what is going on Abante in a daily basis and from different perspectives. We know every day how much money is coming in, how much money is coming out, meetings, call, new clients, campaigns, marketing activity, everything. So that gives us a lot of reaction capacity. We have obtained a very good support model that is part internal, part external in collaboration with Deloitte. And the adaptation to the new tool has been quite easy because, well, our sales people is quite young, so it has been easy through training. And part of this training has been taken during our lockdown through online training, and it has been very successful. Also, Financial Services Cloud has been very useful for us during the lockdown. As you might know, we went home on March 12th, and we went home from one day to the other. And in that weekend, the management team, we decided to focus in two main goals. The first one was that the clients need to know that we were very, very close to them, and also that all the information that we deliver to the clients had to be one and centralized by the management team. For that, we put into action different activities, and those activities could be monitored by everybody and to any client. I mean, any salespeople could know what was going on with their clients, and also we could know the management team in a global basis. These activities were basically three. Every day, our CEO, Santiago Satruste, wrote a letter to the clients talking about the pandemic, economics, and markets. We had a twice-a-week asset management video and a weekly digital conference to clients. And this has been very, very successful, and the clients are very happy. And the second goal was that as we have very young people in the sales team, it was very important to set up priorities to the financial advisor. And what we did was to cluster clients with different requirements, basically related to their needs and emotions in turbulent times. And we set advisory actions for each one of these clusters. And also this could be monitored by everybody in any moment by salespeople, marketing, and management. Here you have two dashboards. That is an example of how we could monitor all these actions. This is an example of the daily mailing. And the second one is a dashboard of the sales activity that we can follow every day, as I told you, in an individual and in a global basis. And to finish, just to say in which aspects we are working right now. We are working on digital onboarding. We are working also on OCR, in mobility, aggregation, data intelligence, because we have a lot of information of our clients, as we have all the information of the financial life planning services. We are trying to put new uses of financial sales, financial cloud to other teams like asset management or institutional sales, recruiting. And also we are exploring the uses of communities. Well, this is a very quick review of what we have done, what we are doing. I just want to say thank you. This is our headquarters in Madrid, and I will be very happy to have any of you if you come to Spain and want to visit us. Thank you, and I will be also delighted to answer any question.
Thank you, Gadea. Appreciate that. Okay. At this point, I might ask all of our guests to join me back in the virtual panel for very quick Q&A. I know we're running out of time, so we're going to be quick on this. Thank you, guys. Gadea, thank you for that. I might start with you, if that's okay. So a number of our audience may have recently made the decision to invest in a customer engagement platform, or actually in the process of building a business case around that. Having just gone through that journey yourself, investing in and implementing a customer engagement platform for your business, what would be the biggest learning for you on that journey? What advice would you give to listeners in embarking on that journey themselves?
Do you hear me? It's fine?
Yeah, I hear you loud and clear.
Well, I think that there are two basic things for us that they are simple, but sometimes we don't remember them very well. I think it's very important that the project should be supported and boosted by the top management of the company. This is for us was crucial that, you know, the CEO of the company that Joaquin knows very well, he has been very involved in all the process of not just launching the projects, but also in the process, results, and the benefits we are getting now from Salesforce. And the other thing that perhaps I learned from the stage before, it's very important to customize the tool to your business model, but just to a point. Because if you customize it too much, you lose a lot of flexibility of the tools that Financial Services Cloud gives you now and will give you in the future. So for us, these are the two main learnings from our movement to Financial Services Cloud.
Very good. Okay. I mean, Joaquin, any builds on that, given you were heavily involved in that process, or?
Excuse me?
I'm just wondering if Joaquin has any kind of builds on that, given he was working with you, or any kind of observation.
Yes. So I think that it's also important to make a quite careful planning. So at the end, so institutions like Abante are very ambitious in the business goals that they have. They have a quite ambitious also a strategic plan. And when you define the transformational roadmap, is important to make it to make a careful planning, defining very clear deliverables, and also achievements that want to be made from a business perspective. Produce an MVP in a period of 4 to 6 months. I mean, be able to produce results in a short time. Also, I would say minimizing the integration with the back office system and maximizing the adoption. I think that this is especially important in this COVID crisis because the environment is changing almost every week. There are new needs that pop up, and you need to define a plan that is flexible enough, but has also a long-term view of what has to be achieved and a very clear understanding of how to implement the different steps.
Okay, thank you very much. We might move on. Sinead, can you share the poll results, please? Let's see what people said. All right, so and I think if we go to the one before, if that's okay first. Said okay, so that's overwhelming, right? So do you believe the level of digital adoption we witnessed through COVID-19 will continue? Overwhelmingly, yes. So it looks like we are here for the long term and it's changed for good, which I don't disagree with. And I think if you just flick on to the next one, broadly, I think, yeah. So broadly, it looks like our listeners are absolutely engaging in this topic. It looks like decisions are being made in terms of investment here. I mean, Joaquin, any commentary, anything surprising about that? I assume you'd agree with the first one anyway.
No, I am a bit surprised about the second result, because what we think is that for many financial institutions, it's not clear the to-be business model and how the next new normal looks like, maybe because we are still in the middle of the COVID crisis. So I think that my feeling is that we are going to see some changes that we cannot anticipate yet, especially in sectors where the impact or the changes in the client's behavior is not clear, thinking in B2B and in corporate and investment banking. So I would say that in some cases, the organizations will need to, let's say, change and adapt their investments to really, well, adapt the company to the new reality.
Okay. Okay, let me go to the audience Q&A. Simon, there's one here from your section I might ask you, if that's okay. So the question is, given customers are so unique and diverse, if we talk about industries like finance, retail, etc., how granular can we get while defining customer journeys?
Yeah, increasingly, the technologies that we're deploying have the ability to create very flexible and orchestrate very unique journeys. And doing so in real time. I mean, that's the whole point of developing, capturing the data and leveraging the insight and the data that we can on a continual basis, utilizing that in real time and changing and adapting journeys as and when they occur. So the flexibility of tools like Salesforce with Heroku and with Einstein, the ability for it to leverage the insights and push that through to front-end channels in real time to design and orchestrate journeys on the fly as and when customers change and make decisions to drop in and out of different digital and human-assisted journeys. That's very much achievable now. It takes time. You've got to have the right data model in place. You've got to have the right infrastructure. You've got to select the right technologies. And fundamentally, you do have to have that fully integrated marketing, sales, and service view. Again, coming back to the previous comment, I think everyone does believe that they're investing in customer engagement, but sometimes in isolation, in marketing, in sales, and in service. But bringing those together as a consolidated, integrated view to create that seamless end-to-end journey and to be able to respond flexibly to changes in that journey is absolutely essential. It's bringing them together. I think that's the key.
Absolutely, I 100% agree with that. I mean, what I might do is just finish on the final question again for you, Simon. You know, where do you start? It's a massive undertaking. It's a big program. I mean, where would some of our attendees, where's the practical place to start to make sure that you're kind of getting business outcomes quickly?
It's always the key thing is releasing that value as soon as possible, and it depends on where you are. It depends on how well formed your data model is and your view of how you're structuring your data, how you're storing that data, and what you want to intend to do with that data. So data is the key. You can't achieve any of this without having the right platform from which to launch from. So you can't get the right insight, you can't leverage the insight if you're not capturing the right data and storing the data in the right way. So getting that single view of customer and storing that data in the right place is essential. So that's got to be the key point. But I do think that it is about looking at what you're doing at the moment anyway. What do you have in place? Are you integrating marketing, sales, and service in the right way? Are you looking across those end-to-end journeys? How can you integrate those more? And then it's probably looking at the different streams and working out how you can release value incrementally by making changes to your data model, by making changes and leveraging certain pieces of insight, and making sure that those are surfaced and actionable in the areas which are going to add most value to you as an organization. And it obviously is a significant task, but one which many organizations are achieving by just breaking it down into different work streams and looking at where that value can be released incrementally across projects.
Fantastic, thanks, Simon. Okay, we are over time, so I do apologize, but I see there's a lot of people still on, so that's great. Obviously, we've kept you engaged, which is brilliant. I want to thank our panelists. I want to thank you for your time and your insights. I really appreciate that. And I want to thank the audience. I hope you found this useful. I hope you found it engaging. If you do have any other questions, if you do want to reach out to any of our panelists or myself, please don't hesitate. We will share additional information off the back of this webinar with you as a follow-up. So with that, I'm going to bring the webinar to a close. And again, thank you and have a fantastic day. Take care.